Inflation continues to surge at 7.5%, much higher than I was expecting at least. Plus, I'll give you a company that is expected to weather inflationary pressures a lot easier than other companies. So that's what we're going to cover on this video. So smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up, guys? And as you can see from this chart here, inflation has continued to persist higher and higher. And you can see now that on a year-to-date basis, inflation in January of 2022 is 7.5% higher than where it was in January of 2021. So the trend of higher and higher inflation is continuing. And so you can see that the US Bureau of Labor Statistics stated that energy remained the biggest contributor to the increase in inflation, with gasoline surging 40%. Inflation accelerated for areas where I actually don't think inflation will decline, which is shelter, food, and food at home. New vehicles also surged to 12.2%. Used cars and trucks are obviously through the roof, and they have been throughout the year at 40.5%. And even medical care services are now increasing, albeit at a much lower rate. And excluding the volatility of the energy and food categories, it looks like CPI rose 6%. And that's the most since August of 1982, so well before I was even born. Now, diving deeper into this a little bit, you can see from this visual representation that all items are really high at 7.5%, but you can see what's really taking it that much higher. It's energy. Energy is almost 30% year over year. It's not like food is low at close to 7% or a little bit higher than 7%, where you can see but that it really is energy. And then, of course, within energy, you can see that it's the commodities that are really higher at 40% year over year for the energy commodities. Energy services are not that much lower. I mean, they're 10%, it looks like. So still not cheap with respect to an increase. And then moving into the food categories, you can see that whether you're buying food at home, so at the grocery stores, or whether you're buying food for takeout, it's all above 6% year over year. Now moving on, so when you're looking at all items less food and energy, you can see that commodities are still very high at, I don't know, it looks like around 12%. And then the services are once again a little bit lower at around 4%, it looks like, but still not where you want to see it. Diving into that food category a little bit more, you can see here that 5 of the 6 major grocery store food group indexes have increased in January. The food at home index increased 7.4% over the last 12 months. All 6 of the major grocery store food group indexes increased over that last 12-month period as well. And of course, the largest areas where you're seeing an increase is meats, poultry, fish, and eggs, which rose 12.2% year over year. And so I wanted to get an idea of what you guys thought and sort of which direction inflation is going. And so Morris stated that he believes that inflation is going to slowly drift down through 2022. And I think that makes sense, especially if the Fed continues to taper and hopefully they increase rates a little bit to sort of control this. James and Marianne stated that the inflation rate is going to decline, as if this might force the Fed to react sooner and more aggressively in 2022 and 2023. And I really think that makes a lot of sense. At this point, we have to start stepping in. 7.5% is a high number, much higher than I ever thought that I'd see in my lifetime. What I wanted to point out to you guys is one of the companies that can really withstand higher inflation and do okay is Google. This is one of the companies that a lot of investors were buying into in 2021 as they were looking to shelter away from inflation. And as you can see, the reason why Google is expected to continue to navigate inflationary environments better than most other companies is like Google search and YouTube ads. I believe that these segments continue to grow at the rates that I'm forecasting them out at. And even Google Cloud will continue to grow, because part of the issue is that although we have these inflationary pressures, the cost to build the infrastructure for a lot of this stuff is already in place. I understand that they're going to experience higher salaries, but overall, I think they can increase their prices relative to those increases in salaries. So I think Google is really able to navigate it. And you can see all of their segments that are expected to continue to do well. The one segment that I highlighted below here with the red line is their other bets segment. This is where Waymo is, and their medical stuff that they're investing in is as well. I think Google has a real opportunity to outperform just from this segment alone. And so you have a solid operating business that is well positioned for this environment, that's growing at huge clips, especially that search, YouTube, and Google Cloud. So essentially, they're firing on all cylinders. And then you have that other bet segment, which gives them that alpha type opportunity. And so I think Google does well. In terms of valuation, if you value Alphabet on an EPS basis, you're probably going to get to around fair value. I'm valuing them at around $2,700 per share, and that's kind of where the share price is coming in at. But I'm not so sure if EPS is the best way to value Alphabet. I think free cash flow per share might be better. And if you value them on a free cash flow per share basis, you can see that I'm valuing them at around $3,300 a share as opposed to $2,700 a share previously. And so they might actually be somewhat cheap. Now, there are value investors who are saying that Google is somewhat cheap. I would like to buy it at around 75%. And so we'll see what the options chain looks like. But I guess what I would say is when I'm looking at it from an EPS perspective and when I'm looking at it from a free cash flow per share perspective, Google is not expensive. And I think that's really what I'm getting at here. You're able to pick up this company for a fair valuation, but also keep in mind, I'm using a 20 times multiple. I think this company deserves a much higher multiple than 20 times, but I was just being a bit conservative with my valuation. So you throw that up to 25 times and you have a very valuable opportunity here with Google. So that's it, guys. Let me know what you think in the comments below on how you're positioning yourselves. And also let me know if you think that inflation is going to persist. Also, if you guys haven't seen it already, I made a video on Facebook on the new news items, including their potential exit out of Europe and Peter Thiel exiting the board of directors. And you can catch that video right here.